Inflation happens when there's too much money in circulation, which can drive up prices and lead to economic problems. While the United States has been the dominant economy for several decades, history has shown that no nation has stayed on top forever. The British Empire, for example, was once the world's dominant economic power, but eventually gave way to the US. Learning from history is important, but unfortunately, people often forget past lessons. One example of this was the presidency of Donald Trump, who dismissed expert opinions and claimed to know better than anyone else. However, it's essential to remember that no individual can be smarter than previous generations' collective knowledge and experience. That's why on InvestWise, we provide you with all of the information you need to be on time with your investments. If you find it useful, please consider hitting the like button and subscribing. In this video, I dwell into the two areas Jim Rogers suggests as safe havens to invest in during the current economic downturn. Jim Rogers is a successful American investor and financial expert based in Singapore with a net worth of $300 million. He is also the co-founder of Soros Fund Management and the Quantum Fund, where he serves as the chairman. The US currently has the largest national debt in the world, and some experts believe that the country is overspending on areas like defense, healthcare, and entitlement programs. Overspending can lead to financial disaster, as seen in the cases of Greece and Argentina. It's crucial to manage to spend carefully and avoid repeating past mistakes. How can we ensure that we learn from past overspending mistakes and carefully manage our national debt in the present? As the world becomes more interconnected and globalized, economic power is shifting. Emerging markets like China, India, and Brazil are becoming increasingly important, and the US faces competition. Adapting to new challenges and staying vigilant to maintain economic stability is essential. Jim Rogers is well known for his work with George Soros on the Quantum Fund, which brought him to the limelight. His charismatic personality and sense of humor make it easier for him to share his wealth of knowledge and financial insights gained from his illustrious career. The future that young people in the United States will face is daunting, which is not a great time to be young. As a retired parent of two teenagers, it bothers me that I won't have to pay bills, but eventually, they will be stuck with them. The benefits we enjoy now will burden them in the future. History has shown that even the most powerful and prosperous countries can eventually run out of money. While it may not happen soon, the signs of wasteful spending and meaningless data are warning signals. Currently, a lot of money is being invested in stocks and financial instruments, but we cannot expect this to last forever. There must be a plan for this influx of money, and investing in online ventures may not be the solution. Although it may take longer to build bridges or factories, it may be a more viable long-term investment. While it is possible that the current situation could continue, history has shown that eventually something will have to give. Jim Rogers hopes this works out. The United States is predicted to have the largest net international investment position ever recorded by the end of 2020. Other countries owe the US $6.2 trillion, while the US owes $14.7 trillion in debt. Back in the 19th century, Britain was the most prosperous country, yet Ireland suffered from a terrible famine. Real GDP per person doubled to $3,263 from 1780 to 1870. Printing more money causes inflation, which affects property prices and stocks. The only reasonably priced things are silver, wheat, and real assets when the government prints more money. The price of sugar has decreased by over 70% to its all-time peak, while silver's value has also dropped by 70%. Inflation rates rise when the growth in money supply is faster than the economic expansion. There is no bubble in the figures. The Nasdaq, which is heavily focused on technology, has entered a bear market, and it has fallen by over 30% this year. Janet Yellen, the 15th chair of the Fed, warned in an interview with CBS News that Americans should be highly concerned about inflation. During her tenure, she launched a program to sell mortgage and government bonds purchased by the Federal Reserve, which resulted in job and wage growth while maintaining low interest rates. The 2008 crisis emerged due to excessive debt, and international debt has risen dramatically since then. Given the current debt levels, I believe the next crisis will be the worst I have ever seen. The growing debt is a cause for concern, and the possibility of hyperinflation is frightening, as it caused devastation in the past. Although hyperinflation is unlikely in the UK, it occurred in Venezuela after a prolonged economic crisis. Zimbabwe was once the wealthiest colony under British rule, but the economy collapsed under Mr. Mugabe's leadership, leading to hyperinflation. While the United States may not declare an emergency yet, the current situation will inevitably lead to extremely high inflation, lower living standards, and currency devaluation. Loose lending rules and a housing bubble triggered the Great Recession of 2008, resulting in millions losing their homes and jobs, and banks being left with billions in worthless subprime mortgage investments. The dollar's value rose by almost 10% in 2022 compared to other major currencies, reaching new heights not seen since 2002. However, if the Fed abandoned its gradual interest rate hike approach, the dollar's value would decrease. With the British pound dropping by 80% against the US dollar, some people believe having a currency linked to a single country is undesirable. If the European Union decided to dissolve its 19-year-old monetary union, individual national currencies within the EU could become possible. During a recession, you can consider asking for a raise if you have a stable job and don't expect to be affected. Some people may benefit if the natural unemployment rate results in job loss and higher labor costs. Despite Germany's economic collapse in the 1920s and the Great Depression in the 1930s, a few individuals still managed to become very wealthy. Jim Rogers believes that the payoffs are significant if you succeed. He owns some precious metals such as silver and gold and plans to increase his holdings soon, even though he isn't good at timing the market. According to both Ms. Yellen and Mr. Powell, gold and silver should be left alone. As an experienced person from a rural area, Jim Rogers understands the value of keeping silver in the dresser and gold under the bed for unexpected emergencies. Investing in gold and silver can help protect us against a financial crisis. While they may not be the ultimate solution, they can still be helpful. Therefore, he is buying both and aiming to expand his stockpile. Jim Rogers is also investing in commodities indexes, betting that a rise in commodity prices will lead to inflation. He has diversified his investments to include rice and other agricultural items since rice price increase is a sign of inflation. By investing in an index fund, he can profit from the price increase across all commodities in his portfolio. Jim Rogers believes that the bond market is in a bubble and bond yields have reached all-time highs worldwide. He wouldn't recommend starting with bonds unless very special conditions arise. During the Great Depression in the 1930s, life was challenging for the average American, and the stock market saw severe collapses in 1929, 1930, and 1931. However, success was possible by investing in commodities or real estate which were not affected by inflation. Gold and silver prices tend to increase with accelerated inflation, and rising commodity prices may be used as a hedge against inflation with other assets. During times of high inflation, bonds and equities may underperform commodities, but their efficiency often grows as inflation rates decline. For landlords, rising rents typically accompany real estate market inflation, and demand from renters is likely to rise as interest rates and prices increase. Investor Carl Icahn is a value investor who purchased the Shutter Fontainebleau Hotel and Casino in Las Vegas during the economic downturn, and he quadrupled his money by selling the unfinished structure to two investment groups in 2017 for over $600 million. Icahn is drawn to undervalued stocks with potential for growth. Gold and silver have been popular investments for as long as anyone can remember, and they may continue to be so. Jim Rogers reminds us that no country can remain at the top indefinitely, but our forefathers' efforts have made us strong and prosperous. By gaining insights from one another's achievements and setbacks, we may build a solid financial foundation by investing in stocks and other safe investments. Jim Rogers plans to post a video next week detailing the steps we can take to develop wealth without worrying about incremental monthly income decreases. If you love this video, subscribe, leave a like, and watch this one too.